Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello and welcome to Ask Rob and Rob. And this week it's Ask Rob and Rob with Rob. You'll see why in a minute. But this is the show where you ask us questions and we give you answers. And we make it very simple for that to occur.
We do. It's actually easier to do it than it is for us to tell you how to do it, because it involves us reading out a number that we mess up almost every week. But that's our problem, not yours. From your side, it's very easy. All you have to do is call 013 808 00035. That's 013 808 00035. Normal rates apply. You'll hear our little voicemail prompt. You'll leave us a message and we will answer you. Alternatively, you can go over to thepropertyhub.net/podcast and leave us a message that way instead. It doesn't matter how you do it, as long as you do it. And that is what the excellently named Rob did this week. Let's hear his question.
Hi, my name is Rob. I have 3 buy-to-let properties myself in the southeast of England. My question is around the whole build-to-rent scheme and how the sort of private pension funds are now investing billions of pounds worth of funds into build to rent, and how this may impact upon the existing PRS in the future, and whether this is an intended ploy by the government to eradicate the small-time buy-to-let landlords in favour of institutional investors. And if that is the case, when do you think that build to rent may overtake the existing small-time landlords? Many thank you.
That is an excellent question from a man with an excellent name. Well, it is something that I think we're going to hear more about over the coming years. And it is interesting trying to read the sort of the smoke signals from the government to see what it is that they are thinking of doing and sort of where things are headed. It does seem that they've got it in for private landlords, based on some of the measures that we've seen. And it's hard to separate it out because there's been lots of kind of nasty stuff coming in the way of the PRS. Some of it is going to be because they're trying to force the sector in a certain way. And some of it is just because it's an easy target to raise tax revenue at a time when it's needed. And it's hard to kind of separate it out. I do think there is undoubtedly going to be more institutional investment in buy-to-let, and I don't necessarily think that that's a bad thing. I think it's probably healthy to have a mix of different types of provision, and it's probably not healthy to have so much provision controlled by private landlords who are, let's be honest, pretty variable in terms of quality. You've got to drive to professionalise the sector. That's very much needed. But then there's no reason why you can't have alternative provision as well. It's definitely going to increase over the next decade or so. But I don't think that that means that we're going to be forced out completely as private landlords. I think there's room for both. And I think having a mix is no bad thing. For a start, there's lots of existing stock. So the build to rent kind of sector is by definition new units that are being built. Existing units are very much sort of within the domain still of the private rented sector. And there's always going to be a need for different types of housing with different costs. There's always going to be a demand for if you've got a good product. It doesn't particularly matter who you are, as long as you've got something that the end customer, the tenant in this case, wants. And yes, certain advantages might be provided to the government, to institutions, and certain disincentives might be put in place for investors. But I don't think that's going to go to the extreme of ending up in a position where it becomes not viable for private investors. I do think that while the balance is going to shift, it's not going to do so radically.
It's not. And a glimpse into the future is actually the student market. Because once upon a time, it was just individual landlords. And you could pretty much buy up any type of property in any sort of condition near a university and you get it let out. Now, there were some great landlords out there who had a great product and the students who would live in those properties would be very lucky. However, most people didn't try because they thought, well, students don't care. We can give them rubbish, crappy properties and they'll let anyway. Then the private investors came in who built the big shiny blocks, the big student accommodation blocks, and that pushed out a lot of the lower level stock and quality had to come up. And it did. However, even with all the money, all the pension schemes, all the private investment schemes that have built all these blocks, these lovely shiny towers, there is still a place, and I believe always will be, for good quality landlords. There are plenty of people, and we've covered them in the Property Hub magazines a few times, plenty of people who execute the student-let strategy very, very well. And that's even with all the competition from the institutions. So I actually think, because I'm a natural optimist, that it could be a good thing in the long run for the standard of rental stock, because people won't get away with letting out rubbishy apartments or houses that are in terrible condition because the standard and the competition is so high. So there are positives, and the positives are that it'll be good quality stock, which I believe should be a right for any tenant, being provided, and a place still for individual landlords as long as the stock that you're providing is of a good standard. So have a look at that, think about that, because that really has already happened in that sector of the rental market, and I think it possibly will give us a glimpse into the future. That being said, the normal buy-to-let market is a lot bigger and will take a lot longer for that to happen. The student market is still quite niche, and it was quicker to do that, but it still took over a decade. So for it to happen in normal buy-to-let, we're talking best part of a generation.
So thank you, Rob, for that question. A really interesting one. And time will tell, really, whether our optimism is justified or not. But what you can definitely say is that if standards increase, it's going to be the good landlords who continue to thrive, and the poorer ones who don't invest in the property or invest in what the market wants, that are going to end up getting forced out. So the best way to be a good landlord, to have the right product, and to make good investments is to educate yourself. You're doing it now by listening to this podcast. You can, if you want to, do it by subscribing to the Property Hub magazine. And I would respectfully suggest that that is an excellent thing to do, because for just £5 a quarter, you'll get a magazine delivered to your door, which covers pretty much everything you could want to know, including the big think pieces about what the future of the industry looks like, the news that you need to know about right now, case studies of people who are doing all different types of investments who you might want to emulate, and all the nitty-gritty lettings, tax and mortgage stuff, all the things that we cover on this podcast, but in a lot more depth. If you do want to subscribe to the magazine, and you don't already, then go over to thepropertyhub.net/magazine, sign up there, £5 a quarter. You cannot go wrong.
You cannot. That sounds like a great thing to do, Rob. I fully agree with you. Once again, go to thepropertyhub.net/magazine and subscribe now. We'll be back on Thursday with the Property Podcast. Of course we will be. And we'll be back next Tuesday with Ask Rob and Rob. But until then, have fun, everyone. Bye-bye.
Bye-bye.